everyone, this is Kathy Lean with BK Traders. So normally we live stream on Mondays and we talk about what to expect in the coming week. But Monday is a holiday, Memorial Day in the US, so we're not going to be live streaming. With that said, I still want to share with you my thoughts on what to expect for the coming week because it's going to be another important one. On Mondays, we always like to learn, prepare, and get ready for the new trading week, and I think it will be just as important to do so this week, even though it's a shortened one and we don't have much going on Monday. Now, a lot of what's going to happen next week will, in large part, be related to tariffs and trade. We got a taste of that on Friday, where, for the most part, the focus was on what was going on in the rest of the world in terms of data, and we didn't have much in the way of U.S. data last week, although we did learn that jobless claims were relatively low and new home sales were healthy. For the most part, it wasn't about U.S. data. But on Friday, we had some very important announcements from Trump. Number one, he threatened Apple with 25% tariffs minimum if they don't start making the phones in the U.S. Number two, he's basically told us that the trade deals and negotiations with the EU is not going well and the EU is not cooperating. So he's recommending 50% tariffs on June 1st, which is pretty much right around the corner. And then he also approved the Nippon takeover of U.S. Steel, which, helped to offset some of the losses in the markets. Regardless, this puts tariffs and trade deals back on the table. And I think in the next week, this week and next week, we're going to hear more, not just about what's how the negotiations are going with the EU, but also how negotiations are going with Japan, India, maybe even China. We have, a lot of information that the market is waiting to see. And we also have to see whether or not, how the EU responds to all of this. So what we do know so far is that, the conciliatory tone that the market may have hoped for from the Trump administration is not necessarily playing out. That, the hope that the reprieve from the reciprocal tariffs would bring some good trade deals is not happening. So that means that the risk is to the downside for the markets. It means that there's certainly more downside than upside risk for the headlines. Now, of course, it can go any way. I've said this every single week. I cannot predict, Trump. I cannot predict how these trade deals will go. I don't think anyone can legitimately say they can. All we can do is prepare for it. And what that means is that, until we hear some good news, we're going to prepare for the worst. And that is why we saw on Friday the sell-off in stocks and the sell-off in the US dollar. And what's really interesting is that the euro is rallying and the US dollar is selling off. Let me show you a chart. Give me 1 second. So this is the chart of the euro dollar on Friday. And this is my zip chart. You can, these are the zip buy signals, which worked out really, really well, but that's not what I'm talking about. So this first, we had a huge jump in the euro dollar off of the first announcement or first comment that Trump made about threatening Apple with tariffs. The market perceived more tariffs as negative for the dollar, bad for the U.S. economy, bad for the American consumer, and drove the U.S. dollar lower. And then 5 minutes later, he's told us that trade negotiations, the EU is not going well. He brought up the 50% tariffs, and euro dropped like a rock. And it dropped like a rock from a high of 113.75 all the way down to 112.95. But look what happens next. Over here, as the day progressed and pretty much right into the London close, euro began to stabilize. And then it began to rally. And actually, the euro ended the day higher, much more so against the US dollar than the day before. We also saw on Friday a consistent decline, a sharp and followed by consistent and persistent decline in the US dollar against the Japanese yen. Against the Swiss franc, the dollar did not recover. Against the Canadian dollar, which we traded a lot this week at BK, we made some really good, a lot of our pips were made selling dollar CAD off of the zip signal and then staying short. And in general, the US dollar sold off. Now, what does this mean? And what does this tell us? This tells us that traders believe that the consequences of these tariffs and trade wars will be more severe for U.S. assets and the dollar than everyone else in the near term. I know everyone here has their own opinion about this, and I've heard a lot of your opinions on how this will make America great again, but we respect the price action. We respect what the market is telling us, which is as of right now on Friday, price action. They think that the U.S. will see the greater pain rather than everyone else. Because if that was not true, the euro would not be higher than when it was trading when Trump made his comment about 50% tariffs on the EU. So this is the backdrop that we walk into the new trading week with. Now, of course, we can't ignore the fact that the euro will be somewhat at risk. And so therefore, it should be no surprise that euro yen should be weaker, euro kiwi should be weaker, euro Aussie should be weaker, euro CAD should be weaker, euro pound should be weaker, because compared to those other countries, they're certainly going to feel more pain from the trade tariffs than the ones that may have either not negotiated yet or got a good deal, like the UK. They're certainly going to feel less pain. Also, rate cut bets for the ECB have shot up after the comments by Trump. So that's also going to have a residual effect on the euro. So taking a look at the euro, I'm going to bring in my moving averages because you all know how I love moving averages. Right now, euro is above all the major moving averages, still looking really bullish. But if we see, euro, and it really needs to drop below 112.70, there could be a more significant decline there. And I think that, the rally there is quite a bit of resistance hanging out, right around these levels here, right below 114.20. There's quite a bit of resistance. And I would actually be quite surprised if euro in this coming week actually broke above 114.50 and held it. I think that the risk is to the downside for the euro this week. In terms of data, we had the German IFO report and we had the PMIs from the Eurozone. They were kind of mixed. Some parts of the manufacturing was good. The service sector was not as good. The IFO, the current conditions was quite terrible, but the expectations component was better. So depending upon what you're looking at, I think that data from the Eurozone has been deteriorating. In the coming week, we have Eurozone confidence, we have German labor market numbers, we have, I'm just looking at my calendar, German retail sales, we have German inflation data, most of which are expected to be weaker. So we should see from last week and this week a little bit of softness in Eurozone data. So I think that the rally in the euro, even though the market saw Trump's threat to the EU as worse for the US than the EU, I think it's going to come back and haunt the euro. So I think, if the euro starts to show some sort of resistance around 114.20 and starts to move lower, that we could see a more significant slide in the euro. For the dollar itself, we have FOMC minutes, we have personal income, personal spending, we have what else? GDP revisions. Those are the main focus for the week. And remember, Monday's a holiday, so all of this is coming basically Tuesday, Wednesday, Thursday, Friday. And we also have consumer confidence on Tuesday. Taking a look at dollar and yen, you can see the dollar has been sold quite hard throughout last week. There is some support, down at 142 and also down at the swing low here at 140. So, there is some support below current levels, but I think there's more pressure on the dollar than demand. And I think, we could see some additional downside momentum, although dollar yen has already had quite a bit move. So, the losses may not be as significant, but it will be far less about the data and the Fed minutes than it will be about more trade headlines. Now, let's imagine that we get no more trade headlines. Then dollar yen will probably rebound a little bit because the Fed minutes, which are scheduled for release on Wednesday, will probably show explain and show the continued reluctance by the Federal Reserve to cut interest rates. We know that the Fed is reluctant to cut interest rates, and the minutes will probably give us the reasons for that. And so that actually should be dollar positive. But the greatest risk for the markets and the fear right now is the tariff and the trade war. And so I would be a seller of the dollar on rallies rather than a buyer of the dollar on dips. As for the other major currencies, the UK, we had some really, really good data from sterling last week. And that is part of the reason why the British pound has basically shot up. And the British pound has found itself at the strongest level since 2022, since I think, what is this? February of 2022. So very, very strong move in the pound dollar because we had good inflation data, we had good retail sales data. We had good data all around for the UK. So in terms of levels, the next major resistance level for pound dollar will be around 137.50, which is also where these lows are here and these lows and this high. So the next stop for pound dollar could be 137.50, depending upon, as long as, we don't get any, anything out of left field. We don't have anything on the UK calendar. So sterling will be moving entirely on US dollar flows. Now, the Canadian dollar, Canadian dollar has been kind of mixed. And let me look at the calendar real quick. On Friday, we have Canadian retail sales numbers, and what's really interesting is that this is kind of similar to the New Zealand data, where the headline number was good, but the core number is terrible, but the market still bought CAD as a result. So the Canadian dollars had a very nice rally against the US dollar, meaning the dollar has fallen. As I said earlier, we were all over this short trade multiple times throughout the past week. First when it dropped into the sell zone, we sold throughout as it was a zip sell signal here, which is the white candle, and then also it being in the zip sell zone, which is the background is red below the indicator line throughout the past week. Now, in this coming week, we have Canadian GDP numbers at the end of the week. That's the most important report. Now, in terms of the GDP number, we did have retail sales in general, even though, it is the market interpreted Friday's number to be weaker. In Q1, retail sales in general has been softer. And, you may know that the trade negotiations from the U.S. and China, we'll probably get we'll probably find out in the next week and maybe or two how those went. But look at this. Dollar CAD stopped right at the low on Fridays, right at the 78.6% Fibonacci retracement of the 2024 September to February rally. I think it's going to it had a very big move in the past week. I think it's going to find some support here. I think it's going to consolidate. The market's going to, and I think, maybe it would find itself back up to 138.50. I would be a seller there, or I think we may have a little bit of a near-term bottom at this point, in my opinion. The Australian dollar, so RBA cut interest rates and said more is to come. Aussie popped up off of, it really had done nothing last week. And then it jumped off of US dollar weakness on Friday. In terms of Australian data, we have Australian inflation data. We have Australian retail sales data this coming week. The data will most likely justify the RBA's rate cut, as well as their kind of dovish stance. So I think the gains in Aussie could be somewhat limited, but still, it's really, going to trade in the market's appetite for US dollars. We do have a Reserve Bank of New Zealand's rate decision. So Kiwi is the best performing currency on Friday. Huge rally. At this point, it looks like it wants to test these highs here at 60.20. And if it does test the highs at 60.20, this would be the highest level we see the currency pair since October of 2024. But the Reserve Bank of New Zealand has a rate decision. The market thinks the Rbnz is going to cut interest rates. Let's take a look at my table here. This is a table that I love to create for you guys ahead of the rate decisions. And you can see, at first glance, there's just as much green as there's red. Green represents improvement, red represents deterioration. And in fact, I would even argue that there's more improvement than deterioration in New Zealand's economy. But, the deterioration in retail sales, in participation, in services, and business confidence is certainly worrisome. I think the Rbnz is expected to cut, following the RBA's move, but I don't necessarily think it's going to be a dovish cut like the RBA, based upon how data has changed. It really hasn't gotten that terrible. And if I'm right, then Kiwi should outperform Aussie. Kiwi could see some upside gains. I like Kiwi more than Aussie, and we could have some nice opportunities in Aussie Kiwi as well. But that's really the main focus from New Zealand. We also have quite a bit of data from Japan. We have the Japanese data dump on Thursday, where we have Japanese inflation data, Japanese industrial production data, retail sales data. Usually matters less for Japan, but it's definitely something to watch out for. Unfortunately, Japanese data seems to have worsened. And that justifying the market's belief that Bank of Japan will not be raising interest rates this year. So it's another reason why dollar yen may actually find a little bit of support. The yen pairs, which have fallen quite a bit, you see the dollar yen, euro yen has fallen quite a bit, may end up finding some support. So as I said, looking at the economic calendar for this coming week, we have quite a bit. Things are quiet on Monday. Powell's speaking, but he's speaking at a college graduation, I believe. And so I don't think he's going to make any real serious market-moving comment, and there's certainly no Q&A as far as I know. We have holidays in the UK and the US on Monday, so trading should be very, very quiet. Tuesday, things kick up a little bit with a focus on U.S. consumer confidence, which is meant to be stronger because stocks, when this survey was taken, did recover. We also have durable goods orders, which is orders for big ticket items. That's probably going to be weaker. Australian inflation data, that's going to be softer, justifying the RBA's rate cut. Then we have the Rbnz rate decision on Tuesday. So a lot going on Tuesday, Wednesday, and that's going to be a big day for Aussie and Kiwi. And then on Wednesday, we have the labor market numbers from Germany. That's always interesting. The Fed minutes, which will probably be dollar bullish. On Thursday, it's a holiday in Europe, but we have the revisions for U.S. GDP. Now, these are revisions. So revisions tend to be less market moving than the first release. And, there's not always revisions. They're hard to handicap, so I wouldn't make too much out of this. But we have a lot of speeches by Federal Reserve officials, by Bank of England Governor Carney. Then on Thursday night, we have the Japanese data dump that we talked about with Japanese inflation, industrial production, retail sales. We have Australian retail sales numbers. We have German retail sales numbers on Friday, German inflation data. That's going to be a big day for the euro. And then we have the most important data for the U.S. aside from the Fed minutes, which is personal income, personal spending, the PCE deflator on Friday. And in general, I think numbers will show the market's expecting inflation to be up a little bit. We also have personal income and spending supposed to be lower. We also have quarterly Canadian GDP numbers on Friday, so CAD will also be on the move. So a lot going on for many countries around the world. Also a focus on the trade headlines. So I think it's going, and it's a short trading week, so it's really from Thursday to Friday. So I think that we could see quite a bit of volatility in this coming trading week, even though it is a shortened trading week. So stay on top of everything with us on my X, Kathy Lean FX, or on my Instagram, which is Forex Macro Queen. And remember, I will never direct message you. So if anyone is direct messaging you for anything on any platform, they're a scam. Otherwise, I wish you all a great trading week, and I will be back, with you on the markets on Tuesday.